a great break over Christmas and New Year. I'm reminded that the induction loop is now operative. Members and officers, please remember to switch microphones on and speak directly into the microphone, and switch off again after speaking. Reporting officers using Teams, please switch cameras on when addressing the committee and switch off again after speaking. Please use the hands up icon to indicate questions and comments. I will invite you then to speak. The meeting this evening will be live streamed to the public, and a recording of the meeting will be available on the Council's website within 24 hours of the meeting. Any exempt private items on the agenda, the live stream will cease prior to the meeting, moving into private. There might be a short delay. Matt, apologies for absence.
None, Chair.
I presume everybody's read the minutes of the 24th of November and as a true record, and I can sign them if that's agreeable. Okay, I presume that means yes. Disclosure of interests. If anybody's got any disclosures, please indicate now, or if they want to get involved in a conversation, which...
As there's one item, I think, agenda item 4, that's about licensing fee increase. So I'm a licensed taxi driver, so there's a direct interest.
What do we agree on that?
Yes,
yeah.
Yeah, so I could sleep the meeting during instructions.
Same. Okay. We're not quorate then, are we? No. Okay. Well, see if somebody else turns up. Section 106, Local Government Finance Act. Any members affected?
On that, more of, Chair.
Urgent business.
Again, non-Chair.
Chair's announcements. Sorry, references from committees and other bodies.
Non-Chair.
Chair's announcements. None at this time. Reports. Item 8, finance update. Dev.
Yeah. So thank you, Chair, and good evening, members, and Happy New Year. Just finance update, just to brief members that we are currently working on the Q3, which means the 9 months to end of December. So the plan is to finalize the Q3, and the report will be presented to the executive on the 6th of March. There's an FRG meeting on the 2nd of March, so we'll be aiming to bring that report on the 2nd of March. But because the FRG is before the executive, there might be a little bit of sort of just couple of days before we can dispatch the report. So we'll be aiming to bring it 2nd of March because the next FRG is way down the line. So that's where we are. And those pressures which you have been reporting as part of Q2, there are still sort of those pressures still, and quite a lot of those updates have been factored in the 23-24 budget. So that's from Finance Update, Chair. Quite happy to take any questions, but as I said, the Q3 report, which is the 9 months for this current year, the forecast will be presented to executive on the 6th of March. Thank you, Chair.
All right, thank you, Dev. Any questions? None. Any comments? I think we'll be looking forward to your report at the next meeting when we have the fuller figures, which means we can actually comment on them. Anyway, thank you very much. So the next item is progress in achieving the auditor's sign-off.
Okay, so thanks, Chair. So we've got good news here. So I will just say a little bit what we've done since we've met both at FRG and Audit Committee. So following from our last meeting, there was few questions which auditors wanted more clarification and more evidence. So we have provided in December, we worked hard and provided all the information which was outstanding. And there was main information regarding the valuation of the airport, the free evaluation and deferred taxation. So the information was there. We had to go through and provide much more sort of explanation. And we did arrange a meeting at discuss at the Audit Committee with Deloitte and PricewaterhouseCoopers. They are advisors who carried out the valuation of the airport and PricewaterhouseCoopers carried out the deferred tax computation. So we've done that, and EY have gone through everything. So we met with Janet, the EY partner, as part of our regular meeting, and I'm glad to say that all the figures have been cleared now. So they've agreed with all our valuation figures, all the deferred tax computation. So we won't have to make any changes to the figures which were presented. So that's good news. There are a few things which you have to just fine tune and just tie up some of the loose ends. So the main issue, which was to do with the valuation and the deferred tax, all has been cleared now. So the figures which we presented has been cleared now. We are aiming to log those now because we're waiting for EY to say yes, those figures won't change. So now we've logged those figures now, and the accounts has been updated already. We are planning to just fine tune the accounts by end of this week, and we've said to EY we present the not the revised figures because the figures are already in the accounts, but the set of accounts with just fine tuning and tying some of the loose ends. And we're planning to do that by latest Wednesday next week. So then, as far as we are concerned, is done. The figures in the primary statement, we don't expect those figures to change because the valuation and deferred tax has been agreed now. And then EY will go through the process and they will be going through, and if there's anything which from their end, they have to do the review and quality assurance. And with Janet, we've agreed, and it's very much now EY to bring those. And then the 3rd of March, there's an audit committee. So we're planning to bring the final set of accounts with EY draft updated report to the 3rd of March audit committee. So that's good because those main issues was to do with the valuation of the deferred tax. Those are the two things which had an impact on the figures. Those have been agreed with EY now. So that's good news, and we're already working on clearing the 1920, which we are going to do it by end of January, and they've already allocated their staff to start look of 1920. So this is a tail end of the audit. So those both we've made very good progress, and 1819 that's very much is on the final stages of finalization now. So thanks, Chair. I'm quite happy to take any questions.
Any questions, comments? I've just got a couple really. Will EY be adding anything to the accounts where they're not too happy with, or will they just pass it straight through without any comments?
So that's the very good question. So in terms of the figures, they've already agreed, but that's the one was about discount rate and everything. Everything has been agreed. So the figures we have presented, those figures won't change. In terms of one of the things they talk about, which they have to do again, because when you get closer to signing the accounts, we have to look at the cash flow. But that was presented. We'll just update that because it's elapsed since we presented, but we presented the 24 months cash flow anyway. So those are the things. And what we discussed last time, Chair, is about they will be putting the paragraph as they discuss in their report about the expansion of the DCO. So that's what they were going to write. But the rest of the report, it will be yeah. And value for money we've discussed about the spot purchase. So those are the two things which they've already mentioned on few occasions. It has been already discussed in quite detail with the audit committee. So yeah. So the accounts, as for the account is concerned in terms of the numbers and the primary statement, as I've been briefing for General Audit Committee, the primary statement, the figures, the Luton Council figures, which was the main, those won't change. Those won't change. So the numbers we have been presenting with the valuation, those won't change. Now, we have to wait for EY to go for the final quality assurance and go through the process of them clearing with their what called the panel of partners. But we have been reassured by Janet that from their side, it's cleared now.
Thank you very much, Devon. That was very succinct and a lot of information. The other question I have is obviously the accounts, 1819 accounts are late. Will we be liable to any fines for this?
For local government, no. The bit which I would say is they are councils who still got, I think there are a couple of councils who still got, I think, 17, 18. So those accounts where it's complex, and government did acknowledge that because of the pandemic, as I've discussed at our brief audit committee, over the last 2 years, we went through quite a lot. So we had the pandemic, we had the stabilization plan for the airport, we had the airport valuation, we had to put the recovery plan for the airport. So a lot of things which has happened. We had SIPFA and Secretary of State, they carried out 2 reviews, so we have to go through that. So there is an understanding that, yeah, there has been delay. So now the valuation, everything has been cleared. We won't have any fine. It's not like the private companies, but we are aiming to get it sorted and then just move on with 1920 and get that sorted as well. But there is an acknowledgement that local government is struggling in terms of getting accounts. So in general, there has been delays on quite few councils who has not been able to sort of get accounts audited on time as well. So audit firm as well, they're struggling with resources. So this hopefully will be addressed, and that's what sort of we are all aiming to get all this sorted. But there won't be any fine. Just finally, just for your question, there won't be any fine for the council. No.
Nice to know that. Anyway, thank you very much, Deb.
Thank you.
Has anybody got any comments, queries?
Just to note.
Yeah, we'll note your reports and the answers to the questions. Thank you very much, Deb. Yeah, just a second. Anyway, thank you very much, Deb. I don't think there's any more questions, so
Thank you.
you can go for your supper and we'll see you in a couple of weeks' time. Thank you very much.
We've got Darren. Darren is presenting a report on sales fees and charges, so I'll stick around if you.
You'll stay.
Okay. Yeah.
Matt has just got a point of order and a question to answer.
Thank you, Chair. In regards to the proposed scale of charge. In regards to the proposed scale of charges, obviously you've got a couple of declarations of interest. So what I propose is that not the entire report is in regards to licensing. So if we take the report and the as read, you still need to declare an interest, but those items in regards to licensing will need to be ratified at the next meeting. So you can still sign off, you can still sort of go through the report, but you'll have to declare an interest in the licensing section. Okay.
Thank you very much, Matt. And now, proposed increases in scale of fees and charges for 2023 and 24.
Thank you, Chair. Excuse me, and thank you, Matt, for the clarification. Obviously, the committee aren't asked to approve the charges tonight. That will be done by the Executive Admin and Regulation Committee and Development Management Committee later in January. So members will recall that some fees and charges were increased with effect from the 1st of November due to the unprecedented increase in inflation and the increased cost of providing services. Not all sales fees and charges were reviewed mid-year, however, but given that inflation is expected to continue to run at a high level, the expectation is that the cost of services will remain high and may increase further. At the time of writing the report, the latest published CPI was for October 22 and was 11.1%. Since then, November's CPI has been published and it was slightly lower, but still up at 10.7%, so it's still very high. The report in front of you tonight presents the outcome of the full review of sales fees and charges. Proposals to be applied from the 1st of April 2023. Separate reports, as I've mentioned, will be presented to the Executive on the 16th of January, Admin and Regulation Committee on the 17th of January, and Development Management Committee on the 25th of January, seeking formal approval for the fees and charges that fall under the responsibility of each committee. So these committee dates will provide sufficient time to publish or advertise any proposals that need to be advertised prior to implementation. The proposed charges are listed in full in appendices 1 to 4 of the report, which starts on page 32 of your papers. A number of services and the charges that the council can levy are regulatory or statutory and therefore cannot be increased unless we are informed by the regulatory body that charges can be increased. There are other charges, such as those for the music service on page 43 of your papers, that need to be aligned with the school academic year and are therefore proposed to be increased from September 2023 rather than April 2023. Where fees and charges were increased mid-year, some services such as parking are not proposing further increases from April. However, some services where charges were increased from November are proposing further increases from April, and these include cemeteries and crematorium, adult social care, community centres and licensing. Now, with increasing costs and the need for the council to set a balanced budget, income generation is a key element of the council's budget, and it's vital for council's overall financial position and for the viability and continued provision of discretionary services. The table in paragraph 14 of the report shows that the council currently derives estimated income of over £16 million from its fees and charges. And the proposed increases for 23-24 are estimated to deliver an additional 756,000. The majority of this, 577,000, relates to the Inclusive Economy Directorate and will help services to offset income deficits that they have reported in the current financial year. Appendix A gives you a further breakdown of that 756,000 across individual service areas and shows that the average proposed % increase in charges and in income yield for each service area. So overall, the average increase in income yield is estimated at 4.6%. Paragraphs 17 to 30 of the report outline the proposals for those services areas where the proposals are estimated to generate additional income of £10,000 or more. And I just want to draw members' attention to a few of those areas. So paragraph 23, cemeteries and crematorium. Cremation fees were increased mid-year to help recover the unbudgeted increase in energy costs. It's proposed to increase fees and charges further from the 1st of April by around another 10%, as we anticipate energy charges and costs increasing further. So the additional estimated income from those charges is estimated at £216,000. Paragraph 24, licensing. The charges for Hackney carriage and private hire licences were increased mid-year by just under 10%. And the proposal is to increase them by a further 5.5% from the 1st of April to ensure that the service can recover additional costs that they'll incur in 23-24. So just for your information, the estimated cost of the licensing service has increased by 5.6% for next financial year. So the increase is in line with that increased cost. And paragraphs 29 and 30, development control and development control pre-application charges. So the paragraphs list the charges where it is proposed to increase charges by significantly more than inflation. Although the increase in income yield, if all of the charges are implemented, will be 5.8%, as shown in Appendix A. The significant increases have resulted from a review by officers of the actual time taken to provide the specific services, which has highlighted that charges were set far too low and didn't reflect the time taken to deal with queries, and also in some cases have not been increased for a number of years. So, for example, the pre-application fees on pages 77 and 78 of your papers, the charges for Category B, major development, Category C, small-scale major development, and Category E, householder developments were last increased in 2019-20. So it's been 4 years since those charges were increased. And similarly for the development control charges on page 79, where you've got the big increases of 178% and 212%, those charges again were last increased in 2019-20. So again, it's been 4 years since we've seen an increase there. All of those proposed increases for development control relate to non-statutory functions, And it's important to note that the end user can choose to use our service, or they can go elsewhere. They could use a private provider, for example. The estimated cost of development control has increased by 11% for next financial year. And these are additional costs that need to be recovered through income generation, hence why we're looking to increase some of these charges. An integrated impact assessment has been attached as Appendix B to the report relating to the proposals, which states that some of the fees have been compared with other planning authorities, particularly those in London. So officers have tried to ensure that what we're proposing is reasonable and does compare with other local authorities. And with that, Chair, there are some officers in attendance tonight, and between us, I'm sure we'll be happy to take any questions that members may have. Thank you.
Any questions, comments? One question really is, some of the increases were brought forward and executed the 1st of November, is that right? Was the income expended increase, was it as expected, or was it less, or was it more? I.e., did the increases affect what people were prepared to spend?
Okay, thank you, Chair. So it's very early. Obviously, those charges have only been in place for just over 2 months, but we are seeing increases in some areas such as parking and the crematorium, where the provisional Q3 figures, which Dev alluded to earlier in his presentation, are showing an improvement in the income levels at this early stage.
Thank you very much, Darren. I can't see any reason why we can just accept the proposals less what item 24. Is that what you've proposed?
Subject to ratification next meeting of the licence.
Yeah. So thank you very much, Darren. Sorry it was so short. The normal person who normally likes to grill you seems to have stayed away for some reason. And again, thank you very much for your team coming in, and hope to see you all again in the near future. Thank you very much.
Thank you, Chair.
And
thank you, members.
Thank you, everybody. Thanks.
well, Matt, are you?
Yep. Okay. Thank you, Chair. Thank you, Chair. Members have before them. Sorry, microphones appear to be playing up this evening. Members have before them the work programme for the next 2 meetings. As previously been stated, the next meeting on the 26th of January will deal with the budget proposals, but members also have a copy of the forward plan. So if there's anything that members want to add to the meeting, this is their opportunity to do so. Just need to move, if that's agreed, then Chair.
Yeah, that's agreed.
Just need to move it to private.
And we just move the meeting to private now, please.
Yeah.